Off in the US dollar. Well, for more on this and some insights into those currency moves, we're joined by founding partner of LTG Gold Rock, Andrew Barnett, live from our Brisbane studio. Andrew, warm welcome to you this afternoon. We heard there those big moves that we're seeing in the US dollar. The Aussie dollar actually remaining pretty resilient at those levels, breaking through 72 US cents overnight. Take us through the reasons behind the big surge that we've seen in the Aussie dollar this week.
Well, the major big move in the Aussie dollar really has been caused, Leanne, by the drop in the US dollar. We've seen 2 days of really significant declines, the largest sell-off in the US dollar since 2009. So the Aussie dollar is back above 72. Obviously, we've seen some better commodity prices as well, but really at the moment we've got the market in a selling frenzy, selling off that US dollar. And it's interesting, we saw in mid-January the market got into a selling frenzy on the Dow Jones for a couple of days and sold it off very heavily. And we saw the last couple of days they really attacked that US dollar. So the Aussie dollar is really higher, more so on the back of the sell-off on the US dollar rather than anything local here or commodities. We saw the monetary policy statement from the RBA. That was fairly well factored in by most traders on the Aussie dollar, and we're certainly expecting a rate cut from the RBA a little bit later this year. But in the short term, the Aussie dollar is higher thanks to the US dollar being lower. Many traders are now in the US expecting the Fed to stay on the sidelines for longer with regarding raising interest rates. But it's really interesting because just as many people believe the Fed will raise rates before June than those who don't. And of course, they can't all be right. So I'm betting the Aussie dollar will be lower before around August, September, back under 70 cents and moving down towards 65 if the Fed decide to step in and raise rates. Because I think if they're raising rates, we're likely dropping rates where we'll see that Aussie dollar decline back lower.
As you say, really being dictated by those moves in the US dollar at the moment. Of course, we're all looking ahead to tonight's non-farm payrolls report, which is coming out of the US. I mean, how is that likely to dictate trade in the US dollar? What could we potentially see there?
Well, and on Wednesday evening, we saw that the ADP private unemployment report was okay. It was 205,000. And there's an anticipation that we could see a number similar to that. Anything over probably 240,000 is going to be a really positive sign for traders to buy back on that US dollar. Anything under 200,000, we could see another flush lower on the US dollar. The US non-farm payrolls, it's a really interesting trade because what we tend to find is any movement on the US dollar or any correlated currency such as the Aussie, the Kiwi, any move higher or lower tends to be erased over the course of the next few hours. But certainly I'll be sitting up tonight waiting for that announcement. I'm anticipating just a little bit over 200,000. If we see anything over 240, 250, that is a positive for the US dollar and we could see it reverse. But anything under that, we could see a slide further on the US dollar and even a rally on the Aussie, maybe even up to 72.5 to 73 cents. But there's some really interesting things happening next week with Janet Yellen also, which will impact the markets.
We'll be obviously watching out for all of those moves. You did touch on that statement of monetary policy that we got out today, and as you said, I guess really well factored in by the market. So we didn't see all that much moving in the Aussie dollar there. But in terms of pricing, I guess the RBA is very much leaving the door open to further rate cuts this year. I note that the swap market's actually pricing in an almost 100% chance that the RBA will cut rates before October, isn't it? So it's really seems like it's a bit of a race to the bottom for a lot of these central banks.
Well, there's 5 central banks now around the world with negative interest rates. Sweden, Denmark, you've got the ECB, you've got the Bank of Japan, and we're going to see more central banks lower rates. And what we're seeing this year is we're seeing the vast majority of central banks either easing rates, printing more money, and then you've got the Fed wants to try and tighten policy. When you have that, we're just going to have an increased amount of volatility. But certainly here at home, the statement we saw this week from Glenn Stevens on Tuesday and again today points towards a rate cut here. How that's going to impact the Aussie dollar, normally would see the Aussie dollar start to decline fairly quickly. But of course, with such a sell-off on the US dollar, for the Aussie to really get negative and move lower, we're going to have to see the US start to show some hawkish signs. Janet Yellen talking next week on Wednesday on Capitol Hill about the economy. Traders are fretting right now about what the Fed's going to do with interest rates. And until we get some sort of guidance on that, we're likely going to see that increased volatility continue. So the Aussie dollar over 72 cents at the moment. Will probably stay around those levels until we get some guidance tonight on the non-farm payrolls, and then of course next week with the Fed. But certainly it's anyone's guess at the moment, but longer term I'm still betting the Aussie dollar should decline.
All right, fantastic, Andrew. We'll leave it there. Really appreciate your time. Thank you so much.
Thanks, Leanne. Take care.